Hey everybody, we are about to start the session in just a few minutes. This is Jose Blasco. I just wanted to confirm that you hear my voice. It would be great if you could just say a quick hi on the chat box just to confirm that you hear my voice. Thank you so much. Hey everybody, we are about to begin. We'll be starting in just a little bit, so like 45 seconds to go, something like that. Okay, everybody. Hello, hello. Welcome to the Get Together session today. I'm just gonna very quickly change the set of slides that we are using for today's session. Just 1 second, so we can be connected with the right set of slides. Here we go. So let's begin the session today. Today is January 2nd of 2019. So first session of the year. It would be great if you guys could very quickly on the chat box just say a quick hi or yes, just for me to know that you hear my voice properly, so that way we can progress within the session with no issues at all. Could you guys please confirm that in the chat box very quickly? That way we can begin. Okay, perfect. So let's begin. Okay, and again, first session of the year, a very exciting year in front of us, especially given how the year ended last year, isn't it? So many things to do, many opportunities to exploit and take advantage of. Lots of learning in front of us, lots of utilizing the financial markets in front of us. So let's do it. Okay. Before we begin, as we always do, wonderful. Thank you so much. Before we begin, very quickly, disclaimer. So the following videos, clips, demonstrations are for educational and instructional purposes only. Traditive provides these videos purely for the purpose of demonstrating a method of using the product. Users understand that all the content used in the video is purely for demonstration purposes only, and is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree that hypothetical results obtained through the demonstration do not indicate in any way the results you may receive on using our products. Very good. So we got the disclaimer out there. Another way to say that is that we got the disclaimer out of the way. So it's now time to get into our TradeStation, which, by the way, as I share my screen, you will see I am very close to enter a trade, which I would like to discuss with you in just a second here. Here we go. You should be able to see the screen. Okay, so today again, you remember that we're gonna begin the year with a different structure compared to the sessions that we used to run into the last year. This year we're gonna get a little more organized, a little more efficient with our time, a little more structured as well. And in a minute, I will share with you the calendar just to rephrase it for everybody, or in case you missed the prior session that we did. So everybody understands better the structure that we're going to put in place to support you on using the AutoUFOs app and maximizing sizing the opportunities in the marketplace all together. Okay. In any case, before I do all of this, before we do a little bit of, or getting organized, since it seems that the S&P 500 futures is quite close to the red UFO that we have on the screen, and I have a trade there. So I wanted to give you a visual of a trade I have in front of us, which I will be explaining much better later and you will get to understand the rationale behind it and how is this trade going to perform, or how do I expect it to perform, and the rationale why I believe this trade could be of a high probability, and therefore I have an order in the system waiting to get filled. Okay. Good to see you all, guys. I see your messages in the chat box. It's nice. Sunny here in Florida. Very good, Orlando. Nice to see you here. Quite sunny in Spain as well. I am in Spain at the moment, even though most of the sessions are conducted from Singapore. I happen to be in Europe, and sunny Spain as well. Okay, so enjoying a little cold though. The winter season in Europe obviously is not like in Singapore, so little chilly here. But anyway, let's focus on the markets, guys. Okay, let's begin. So, I'll come back to this screen in just a minute. Let me switch screen very quickly because we need to, as I was saying before, we need to get organized, and then I'm going to come back to TradeStation right now. So in this process of getting organized, let me see, where is the app? I am just switching my screen here to share a different window. Okay, so it's not allowing me to share. I'm going to share it differently, guys. Just 1 second here. Here we go. So you should be able to see my screen now. Okay, and basically what I have in front of us here is 4 websites that I want to make sure everybody is aware of. Okay, so the first website that you see in front of you is www.tradewithufos.com. Okay, so I am just putting that on the stream so that way you can see it as well, and you can replicate that on your computer. Okay, so this is our corporate website, is the product website, is the UFOs website. You're gonna find all the information you need here to be able to run the application on your computer and be supported on how to use it. So we have the subscribe button, which is where you click to subscribe. The guide, which I always talk about the guide. Let me click on the guide. It's imperative, guys. It's critical that when it comes to using the app, you understand how the app works. And to be able to understand how the app works, it is very recommended that you expose yourself to the guide. You may have seen this before, but if you haven't, you have the guide in 2 versions, PDF for 9.5 and 10.0. And if you keep scrolling down, you have the guide in video. So you can learn about the calibration, the components and the settings, making sure your TradeStation is ready to use the app. Watch those videos or read the manual or do both, because that's critical for you to be efficient using the tool. The next one is examples. In this example section, you will understand better how to use the app from a very generic point of view. Of course, in the sessions that we're going to spend together, our get-together sessions, we will use the app together, so that's going to be even better. But again, the more prepared you come to our sessions, the better it will be. So take a look at examples. Samples is also another very important section where you will actually see trade examples that may have been executed by some of our traders, some of our users of the app. Okay, so forex trades, futures trades, all sorts of trades that you could learn from it. Okay, here is a little bit as well a post that we had where we look at the calendar for January, where you can see in yellow color January 6 and January 27 the sessions that we're going to do that we are calling sharpening. Those sessions are going to be to sharpen your skills. Okay, so understanding better how trading works, understanding better how the app works, etc., etc. And then green color, which today is a green color day, January 2nd, that's going to be a day where we are doing short-term trading. And when it's going to be blue color, like January 4, for example, then we're going to do longer-term trading. Okay, so expect most of the green days that we're going to be trading forex and futures, and expect most of the blue days that we're going to be trading options and forex. Okay, that's going to be options, forex, and stocks as well. Okay, so that's going to be most of the applications that we're going to do together. Okay, and finally, talking about the get together, the sessions, you got a get together button on the upper left where you can see the whole calendar for January, the one I just showed you, where the times for the sessions will be advised. Okay, they will show up here, and you can see what the sessions are about: short term, longer term, sharpening, So you see how this is going to work. Okay, so make sure you scroll down if you haven't yet, so you can input your information here, name, country, phone, email, etc., etc. So that way you join a list of attendees, and therefore we will notify you of anything related to the session in case there is a change of schedule or we are doing some extra sessions or something. So make sure that you are connected with this page. And also one more, there is a YouTube session button here. If you have missed any of the prior get-together sessions and you want to catch up, you can just click in here. That would open a YouTube page. There is a playlist where you can see, starting November 14 all the way to last week, that was last session of the year, you have 7 sessions right now, and this, of course, is going to grow. And you can go back in time and take a look at what we did and learn from it. Okay, good. A little more organization. Okay, next one. Again, I'm taking advantage of the fact that today is the first session of the year, just to get reorganized in case some of you are with us today for the first time. So Trade with UFOs, it's also a Facebook page. Okay, so you don't need to be a Facebook user you don't need to be a Facebook user, or you don't need to be registered with Facebook to be able to connect with this page and look at the content. Okay, of course, if you are, you can interact more easily, but you don't need to. And again, if you scroll down, even though from time to time it will show something on the middle of the page, but if you scroll down, you're going to be able to see trade examples from our users. Okay, apart from a beautiful Merry Christmas message, you will have trade examples from different users that have different trading styles, and this could be very, very helpful to you if you were to be still putting together a trading plan for yourself. Okay, so that could be important to you. We also have the same content in LinkedIn in case you prefer to use LinkedIn or you use LinkedIn. So the Facebook page, let me put it on the stream as well, so you can see that easily. Okay, so let me get that out there. And also the LinkedIn will be linkedin.com/company/trade-with-UFOs. So you have almost the same content that you have on Facebook, but also on LinkedIn, in case you prefer to do that. Okay, so here we go. And finally, the last one before we jump into TradeStation, it's the TradeStation Trading App Store. Okay, the TradeStation Trading App Store, where what you would want to do is to, in the search button on the top, just type UFOs, for example, UFOs or AutoUFOs if you want to be a little more purist, and you click on the search button, and here's the app. Okay, so here is the app, and if you want to subscribe, you can choose the free version, which is limited in time, or you can just subscribe, and now you have app to the app, for as long as you choose to remain subscribed. Okay, so I am also adding this on the stream, so you have all that information in front of you. Okay, we may come back to any of these, but right now what I'm going to do is switch to TradeStation. Here we go. So I am in a trade here. It seems that I have got filled in this trade, and now, so we'll see what's going to happen now. There is a little difference since when I planned the trade until now. When I planned the trade, I was planning for a final target to be the bottom blue line. Okay, and it seems that a new green UFO has formed since I planned the trade. So it seems that I'm going to have to move my my target to a little bit of a higher location. So I'm going to move it up to 63.75. This is where it's going to be. Okay, so unfortunately my room for profit has been reduced a little bit. Okay, but it's okay. It's what it is. We need to adapt to whatever the market gives us. Okay, so I just entered this trade here, and so we are in. Like every trade, we may end up in a profitable position. We may end up in a in a break-even result, or we may end up in a profitable status. Okay, so we'll see what's going to happen in this case. We're certainly ready to take whatever the market is going to give us, either a profitable trade or a small loss, okay? Depending on where the stop is. The blue line on the top, STM, is the stop market. So if it gets to that blue line, I would be stopped out for a loss, okay? Now, let's talk about the rationale behind this trade, how the trade was planned, etc. Because today is our first short-term trading day for the year. And the idea is not only that we illustrate short-term trading with this trade. The idea is that actually, little by little, as we spend time together in these sessions and you start becoming experts of using AutoUFOs, not only you are an expert of the app itself, but you also have a trading plan around it in order to be able to produce consistent results for yourself. Something that we have discussed many times is that trading is all about consistency, and in this case, consistency on results is obtained through producing consistent action. And that's why I will be very persistent every single session, suggesting that we need a trading plan. Okay, so the idea is that together we're going to come up with rules that we'll discuss so you guys can put together your own unique trading plans, okay? And I'll be delighted to help you and guide you into reaching that stage, okay? In the meantime, let's begin today with explaining why did I take this trade? What was I thinking? What was I seeing when I was looking this trade? And therefore was the rationale, because that probably will help you to hopefully, develop a few rules to put in place for your own accounts. Okay. Let me take a look at the chat box here. I have a message from Fernando. I love you have more than the 3 videos on futures. Yes. And right now you have a video running live in front of you, isn't it? So that's going to be the most useful part, I would say, because those recorded videos are hopefully very useful, and that's why we leave them recorded for you to go back and consult. But really, the live application hopefully will be the most useful for you. Okay. Good. Perfect. So yeah, and Vincentius, Happy New Year to you as well. Yeah, again, it's a pleasure. I just started the session and we started with it, but delighted to begin the year with you, all of you guys, first trading day of the year. So thanks for that. Anyway, so let's go for it. So what was I looking at in this trade, that may end up producing us a nice result here? What was the rationale behind it? Okay, well, if you notice in the bottom left, sorry, in the bottom part of TradeStation, I have 3 tabs. I have a workspace called UFOs Trade with UFOs, okay, which is the one we have used together multiple times. I created a new one called the Fibo Lab, which we will use to do Fibonacci stuff. And I have another lab here, which is the EMA lab, where the idea in this workspace is to combine a very simple use of a moving average together with the AutoUFOs. And hopefully this is what will really produce the results that are desired, because again, there are many ways to think about trading, but as I said a minute ago, I will be very persistent all the time when it comes to finding ways that produce consistency in the action, okay? And Fibonacci is one tool that could help you to be more consistent, because the results from Fibonacci are just mathematical calculations, and mathematical calculations, there is no room for subjectivity there. And moving averages, in this case EMAs, exponential moving averages, it's another tool where you also have the math done by the computer, and therefore you end up with certain calculation or results that are not subject to subjectivity either, because there is no human interpretation. So in these 2 sessions today for short-term trading, my plan, which I'm not sure we'll have time for all of it, but my plan is to talk about FIBs and EMAs combined with UFOs because of that reason, because it makes your life simple, there is no subjectivity, it's mechanical, and therefore, as long as you surround yourself by specific rules around it, it should help you to be more consistent in your action, and therefore potentially produce more consistent results, which is the ultimate goal. And I will say that a million times, okay? And hopefully I will hear you say that too, and I will see you type this in the chat box, because this will be embedded on how you think, and therefore you trade in a way that is mechanical. Is that making sense, everybody? So let's begin. I got two charts in this particular workspace, okay? In the bottom part, let me maximize it. Okay, let me maximize the chart. Okay, we have a 15-minute time frame of the S&P 500 futures. Okay, and what I have added to this 15-minute time frame of the S&P 500 futures is a moving average. Okay, this is what I have added. I have added a moving average. It's an exponential moving average. Is the one that comes by default with TradeStation, which is a 9-period moving averages. It's nothing magic, nothing fancy or anything like that. It's just a moving average. That's it. Okay. Now, why am I adding a moving average? Well, let me go ahead and scroll back in time and show you a lot of data on the screen, and you will see what happens many, many times. So for examples, and by the way, and there is a reason for it, okay, and the reason is very simple. Computers trade moving averages, and therefore moving averages could be source for on-field orders entering the market. Okay, so, and remember, it's all about on-field orders. So we could certainly use those moving averages. So notice how, for example, at this moment in time, this market is coming to the average and is producing some sort of a reaction and bouncing back up. Or here as well is bouncing back up and down from that moving average. Here, price is being kind of supported by the moving average and going back up. And then when there is a clear cross of this moving average, and when price comes to the moving average, it's going back down. And every time it's coming to the moving average, it's going back down again. And coming to the average, I'm going back down again. And you can see that stuff is happening around the average many times. Again, this is nothing magic, nothing new. It's just because computers trade moving averages, and in many, many places on the chart, you will see the same phenomenon happen. And by the way, not only the 9 moving average, but many other averages too, because the world is full of computers trading averages. So it is nothing magic. Okay, so now a trader could wait for price to come to the average and buy there, or short if price was below. The problem by doing that is that you are only relying on the moving average, and then we have two questions more to ask ourselves as traders, which is, so let's say the average is going to be my solution. Question number one, what if I'm wrong? Where should I place my stop? Question number two, what if I'm right? Where should I take profits? And the average doesn't give you any answer to any of those questions. Okay, so in one hand, it seems like it could be a useful tool to act as an entry, but then when it comes to exits, stops, or take profit targets, the moving average doesn't give you an answer. So what's the idea? Well, the idea is to combine the moving average. Okay, we already reached target 1, by the way. Combine the moving average with the UFOs. Because if I had a place on the chart, okay, let me make this a bigger size. If I had a place on the chart where that market is hitting a moving average and therefore is likely to react to it, but lining up with this moving average that was located at 2460 something, 68, something like that. If that moving average was located at 2468 and right above it, right there, we had a UFO. So what's happening now? Well, what's happening now, it's actually quite cool. First, okay, what's happening now first is that we have on-field orders in the market that have been identified by the app AutoUFOs. So you already have on-field orders in the market that you know are there, where the circle is. That is already adding probability for success for you. But on top of that, you also have a moving average, which is not a magic tool, but it's an enhancer of probability, not only for on-field orders to be in the market, but for new on-field orders to be added after you enter the trade, because computers may trade the average, and therefore computers may start injecting more orders after you got long or after you got short, like in today's case, which, by the way, a new UFO just formed. So I'm just going to move my stop here to 44.6875. Okay, so I'm just going to move this to 48.6875. So now my stop is located right there in the white space between the UFOs. Okay, so now it's either I get to my target or I get stopped out, and whatever happens, this trade already reached target one, and on top of that, I move my stop. So this trade is profitable no matter what at this point, which is great. It's a great way to begin the year together. But at the same time, again, the rationale, going back to the rationale, is very simple. The key is the auto UFOs. You had UFOs on the chart. That's the key. But on top of that, to make yourself more mechanical and to not to take all the trades in the world, to only focus on a few trades that potentially could be of a higher probability, you just waited, like I did, to take the trade where you had a confluence of this very short-term EMA in a 50-minute time frame, which is a time frame very common. In other words, many people trade it. In other words, many computers trade it too. And therefore, you have an extra probability for new orders to be injected in the market. That's how you want to think about a moving average. A moving average, starting from now on, it's not a moving average to us. It's an extra tool that increases the probability of new orders to enter the market after you enter the market. That's what this is for us. Is that making sense? And so the attraction for the moving average was that one, and then the key was the confluence with the auto UFOs. So basically, I ignored all the UFOs on my chart, and I only took the one up here. Why? Because it's the one that was lining up with the average. Okay, what a simple thing to be done. At the same time, you can see the power of it, and it made your life simple. It doesn't require much time of analysis. You don't need to look at too many time frames. I'm dealing with 2 time frames only. The 15-minute time frame with the average. Why? Because it's a time frame that is very commonly used. So that increases the probability that computers will execute this trade. And then for execution purposes, on the top, I'm using a 2-minute time frame. Why? So my UFOs are tiny, and therefore I have tiny risk. So if the moving average is not going to support the price, and the UFO either, well, then the risk I have in the trade is going to be minor, and therefore there is very little money to be lost. Okay, that's the idea behind the rationale. Okay, so before I keep going, I want to add more detail and so on. But before that, I want to take your questions. I want to hear a couple of your thoughts on the chat box to make sure that we are in sync, that everybody is with me on the rationale of what I just explained, etc., etc. Okay, so let's take a look. I have a question from Supply and Demand Trader. Nice to see you, Supply and Demand Trader. Thank you for this real-time example of trade management using auto UFOs. It is very valuable and should provide for clear set of rules. Yes, thank you so much for your message, and you read my mind. That's exactly my intention. Okay, because really, the UFO. I mean, certainly we have a user guide and we have videos that explain how to use the UFOs, and and we can spend time, and we are very, very happy to clarify the use of the UFOs. But it's quite simple, isn't it? I mean, there is very little to explain if you wish. So the key here, and my intention, it's really to help you put a couple more rules around it, so you end up with your unique trade plans, and that to be made of rules, which is exactly the last word that you use in your message. Okay, so thank you so much, Supply and Demand Trader. So we just got stopped out now at after moving the stop. Okay, so this trade hit our first target and then hit our stop out. Okay, and I will need to take a look at the trade manager window to look at how much the trade produced. We can look at very quickly here. If I look at the futures account, let me make this a little bigger so we can get the final. We didn't reach our target. Okay, we didn't reach our target, but this trade, oh sorry guys, click in the wrong place. This trade produced right here $157.70 of profit after paying commissions. Okay, so net profit of 157.70 in this particular case. Okay, so not the best trade of the year, But again, the key is the rationale behind it that we had, okay? So what we're gonna do now in the remaining part of the session today, we have like 30 minutes in front of us, okay, which I would be delighted to use to take your questions and so on. But also my goal in those following 30 minutes of the day would be to plan more trades using the same rationale. Hopefully we'll be able to execute them together as well. That would be great, okay? And that way you guys can get to use your UFOs and start practicing all those rules, okay? And of course, you decide if you want to do that using real capital or paper money. So that would be your decision, okay? But just know I'll be placing orders in my system, so you do whatever you feel comfortable with, okay, everyone? What is the calibration settings you are using on this example? Very good question from Fernando. So the calibration setting I'm using in this example, just because everybody's using a different calibration setting, I am just using the one that comes by default, which is 0.5, which if you have been playing with the tool, probably you have identified it's almost never the best. Okay, normally different values will often produce better stats. But it's the one that comes by default, and it's halfway between 0 and 1. So I think it's fair for me to use 0.5. But certainly you guys can use any other parameter that you may feel more comfortable with, okay? That's nothing wrong with that, okay? We have Orlando. Should we add a contract on that second red UFO just formed? I guess you are talking about the one that was. Oh, okay, I hear you. Yeah, well, we don't have it on the screen anymore because now the second UFO now has been traded through, so it's not on the screen anymore. So obviously, the answer to your question, now that I read it, is obvious. Is no. We are not going to do that. Earlier, it could have made sense because that UFO may have been lining up with the moving average, so it could have made sense. Okay, but at the same time, as a trader, in most cases, and definitely, I would say that could be a good recommendation. Normally, we like to take every trade and make sure that every trade stands on its own, right? So in other words, if you are in a trade, you're just gonna ride this trade until the end of it, right? And because I was still in the trade when price came back to the UFO, then I would not plan to add a contract because it's kind of like now I'm financing the new contract out of a prior profit. And therefore, I am being a little tricky with my own risk management. Okay, so I mean, if you are equipped with a very powerful spreadsheet and everything is planned in advance and all of this, so you know what? I'm not gonna say it's wrong, but at the same time, it may not be the most efficient ways because it also may trigger too much of the emotional trading, if you wish. Okay, so it's better to treat every trade independently, everyone standing on its own. Okay, so let's go for it, guys. So what do we have now? Well, what we have now is that this market now is trading above the average. Okay, and the average is located here at 74.68. Well, in other words, if this market was to come to this green UFO, 64.69, the average is 64.68. Well, you know what? Maybe I'm going to enter a little lower. So the average below in pink color, or maybe I should say purple color, is trading around 2468.5. So I'm going to plan to enter where the dark circle is, and I'm going to kind of like get those two green UFOs and treat them like it's one. So what I'm going to do is 64.28.25. I'm just going to come in here, place an order to buy two contracts. Okay, here we go. My stop needs to be below 25, so I'll make it 24.65 even. So that's going to be the location for my stop. Okay, and then my second target, I'm going to make it. My second target is going to be the opposing UFO, right? So I'm going to make it that is 76.75. Sorry, 24.76.75. So that's going to be right here. Okay, that's going to be my final target. And then for the first target, I'm just shooting for a mechanical 1-to-1. Okay, mechanical 1-to-1. Okay, so 1-to-1, I'm risking from 75 to 25. Let's do the math very quickly. Okay, so 75 minus 68.25. Sorry, I'm looking at the wrong values, guys. Sorry for that. Okay, so it's my stop is 65, and entry is 825 minus 65. Now I got it right. 325. So 325 on top of 68.25. That's going to make my one-to-one mechanical target to be 71.5, which is 3 ticks higher than where it is at the moment. Okay, so I'm just going to move it there. And now I have my entry, stop, and target 1, which is a mechanical one-to-one, and then my target 2 is a little further away. Okay, so I'm about to get filled. Okay, and it's interesting. I'm not sure why. Okay, now it seems I have a little bit of delay in the matrix at the moment. Of course, I'm doing that right 5 minutes right at the open. Trading a 2-minute time frame is a little daring here, but I would prefer to do that with a higher time frame at this time of the day, because volatility could make the 2-minute time frame zone to be not the most reliable in the world, isn't it? But anyway, so it seems that we're having a good initial reaction. Again, because it's the very beginning of the day, I'm going to be a little aggressive with moving my stop. Okay, well, here's the volatility that, with a little bit of a higher time frame, I would be able to avoid this. Okay, so I'm just going to wait. Here we go. I'm going to move my stop here. Here we go. So we just reached target 1. It didn't allow me to replace the target, the stop. No, here we go. Now it did. So we just reached target 1. Again, what did just happen here? Well, we had price coming to the UFO. We had the normal reaction, the expected reaction from the on-field orders. And on top of that, we had the moving average hitting at that time, acting as a potential tool, adding more on-field orders after we got in. Okay, and therefore, so the trade has been working properly. And now we just need to wait. We just need to wait. There is nothing to stop price to reach the upper red UFO. It doesn't mean it's a guarantee we're going to reach it, but there is nothing for this to not to happen. So we're just going to wait patiently. We are professional traders. Patience is part of what we do, and we're just going to wait. Okay, and in the meantime, like it happened earlier, a supply and demand trader was making a comment. Like it happened earlier, if any green UFO forms, we will use that to trail our stop and keep moving the stop towards the direction of the profit. And hopefully we'll maximize the profit or reach the target, which is always the ideal scenario. Okay, so a little daring in this trade because of the time of the day which we took it in with such a small time frame. What we did made a lot of sense, and it's actually proving to pay us. So it's good, but at the same time, I would like to throw a little comment. If you have never done this yourselves before, it would be good that you practice the same idea with a little bit of a larger time frame if you are going to be trading right at the open, just to avoid volatility spikes and things like that. Okay, so we got a green UFO forming here, but notice that the green UFO it's actually engulfing our stop. So really, there is nothing to be done here. We're just going to wait and let the trade play out. It's certainly tempting, as you guys know. You see the P&L go up and down, and very, very many times, you may have the temptation to get out of the trade too soon or get emotional about it, and that's where hopefully these sessions together will also help you to understand that doing nothing is the right thing to do. Okay, and if we get stopped out, we still got what we wanted. So that's the key. Okay, we are not here to get small profits. We're get here to reach targets. That is what this trading is all about. Okay, and so we are just gonna wait patiently until whatever happens. Okay, and that's it. But again, coming back to my comment, what I was saying is that if you're gonna be practicing this, using this time of the day where it's quite volatile because it's when the market begins trading. Maybe a little bit of a larger time frame would do a better job for you, a little more relaxed. You would see the fluctuation would be the same, but would impact you less because your zones, your UFOs would be a little wider. So maybe instead of using the 2 minutes and the 15 minutes, okay, maybe you can use the 60-minute time frame below, and maybe you use maybe the 5-minute time frame above, right? Or if you want to be even a little more relaxed, you can go ahead and use maybe the 15 minutes above, and maybe below you can use the 4-hour time frame, something like that, okay? And let the trade play out, okay? Because the challenge, especially at this beginning part of the day, unless you have traded for a while, it's to keep your emotions cool, okay, and sit on your hands and do nothing. Okay, we have a saying in Spain. We say that the only way to have a Spanish person not to talk is to ask this person to sit on the hands, because Spanish people, just like Italian, we normally use a lot of our hands to talk. So if you were to sit on your hands, next thing you know, you cannot talk. Well, guess what? Trading is kind of the same. If you sit on your hands, you cannot trade. So to stop yourself from acting manually and sometimes making any human error mistake or emotional mistake, just sit on your hands. Okay, so that would be a good way to approach your trading. Okay. Anyway, let me see. I have another question here from Orlando. So we'll get it on the stream. Orlando, which is fine, but it would be good to go over your thinking about trading, not with a trend in short-term trading. Yeah, we could certainly do that too. We could certainly do that too. But again, today, my goal, more than talking about trading, in a very generic fashion, or we'll do that, and we just got stopped out here at the entrance. So this trade ended up as a little bit of a break-even result. My goal today, more than talking about trading, which is what we will do when we do sharpening sessions, my goal today is more to do the trades and help you add a collection of rules to be able to produce better results. Okay, that's going to be my goal. Okay, how is it going so far, guys? We have taken 2 trades here in very little amount of time. You guys saw the first one kind of like already executing itself because I planned it before we started the session. But for the second one, you saw me plan it and you saw the execution. Please, on the chat box, go ahead and tell me more about questions you may have, etc., etc. How is it going, everybody? Just give you a few seconds for you to have time to type. Okay. Okay, it seems that you guys are pretty clear. And let me try to read your mind. The fact that I'm receiving very few questions from you, or I'm receiving acknowledgements that you're with me, probably means that what I just explained is not that complicated, right? And let me tell you, that's the key. Okay, let me tell you, that's the key. Whatever you do in trading, you want to make sure it's a simple process. If your process is complex, it takes too long to plan a trade. And then the probability of mistakes or getting emotional or both, it's too much because the methodology is too complex. Is that making sense? So the idea is to keep it simple, because if it's simple, you have little to think about. It takes little time to plan a trade. The probability of making mistakes is less. And because your choices within your plan, it's very little, because your choices within the plan are very little, then there is no room for you to get emotional because you don't have too many things to choose from, because the options from your plan are only a few. Is that making sense, everyone? This, I'm sure many of you that have been trading for a while, many of you, I'm sure you know what I just said. It's the key, and at the same time, it's way easier to be said than to be done. Okay, and if you want to comment on that, maybe you want to share some of your personal experiences. Again, I would love to hear that from you. If you want me to keep it for myself, I will not share it on the stream. And if you want to share with the other traders in the room, I'll be also delighted to share your post or your comment. Okay, so but it would be good that we get into the habit that during those sessions, I'm not the only person providing comments or experiences. It would be good that you guys also share yours. Is that making sense? Because in the end, all of us are traders here. Okay, some will have more experience, some will have less experience, some are used to use AutoUFOs, some have never used AutoUFOs yet. But wherever you are at, in the end, we are people, we are traders, and we are human beings. Okay, and you have heard me say before that to be a successful trader, you have to move away from the human component the most you can. Okay. Anyway, so let's keep going. Okay, so and this, by the way, is trading too. Okay, so we just got stopped out after for a break-even trade in the long, and then in the end we did accomplish reaching the ultimate target. Okay, so this is also part of trading, but again, the fact that this experience just happened to us doesn't mean that you need to change your rules. Because acting mechanically is the key. Okay, guys? So let's keep going. Let's do this. Let's switch market. Okay, so maybe we can find an opportunity with a different market. And by the way, Orlando, I'm going to add a comment here because as I observe price going through the red UFO, a minute ago you were asking, let me get your comment on the stream again. You were talking about it would be good to learn more about my thinking, not in the direction of the trend. Okay, so again, we'll talk about that more in depth in sharpening sessions. Okay, but especially when you're dealing with very, very small time frames, like a 2-minute time frame. Okay, you gotta be very respectful of the power of the trend, because those 2-minute UFOs, they represent on-field orders, but obviously they represent tiny stack of on-field orders. Okay, and you can see that when that's the case, price will often go through, and you cannot rely that much on it. Why? Because it's only a 2-minute time frame. Is that making sense? So it also depends on the time frame. Okay, so in this case, if you're going to use very small time frames the way I'm doing, probably you will find help by combining the average and the UFOs, because what the UFOs are going to do for you, it's the key, right? They're going to save you time. They're going to find the on-field orders. They're going to add probability for you that you can quantify. They're going to give you not only the entry, but the targets too, and also the stops. So, the UFOs are the key. But the beauty of the average is that now you know which UFO to use and which UFO to ignore, because by using the ones that line up with this average, you are forcing yourself to trade in the direction of the trend. Is that making sense? Because it's an average. For the average to move in a particular direction, the average price movement had to happen in that direction. That is how the average is calculated. So in other words, it forces you to trade in the direction of the trend too, which at some point, at some times, it's not that relevant, depending on the market conditions. But certainly in certain time frames, like a very small time frame, like 2 minutes, well, then it could become quite relevant. Is that making sense? Like, for example, price is coming to this green UFO now, 24.75, but notice how 24.75 is quite higher above where the average is. So you have on-field orders, and price could certainly bounce and move, right? But the probability is less compared to if you waited for price to come much deeper around 24.71. Okay, so now the problem in this case, okay, real-time market conditions, okay, I'm calling it a problem because look at the size, look at the high of this green UFO compared to the high of the next one. Okay, so in other words, if your stop is going to be on the white space below and your entry is going to be inside, there is a lot of distance between entry to stop. Okay, and why is that? Well, because that UFO has been formed in market conditions that were coinciding with the market opening, and therefore it's quite volatile. So the UFO is quite high. Okay, it's a tall UFO. And therefore there is a lot of risk involved in taking this trade. Okay, so I'm gonna try to find a different market to find a better condition, and if not, we'll do the same. We'll switch time frames and look up for the same setup with different time frames to plan on a short-term trade, because today we are doing short-term trading. But instead of doing it so short-term, with the 2-minute time frame, maybe we're going to use a little bit of a higher time frame, where now a little bit of a wider UFO is not going to be a problem because we're going to be short term, but not that short term anymore. Does that make sense? So I'm switching to the Nasdaq, which probably will give us a similar picture. Okay, so NQH19, switching to the Nasdaq in both charts. Okay, we have a very similar picture. We have this is 2219. Unfortunately, 2219 is right there in the middle of nowhere. Okay, so we have the moving average, but the UFO is much lower. Okay, so with this particular collection of timeframes, we will not have a valid trade based on the very simple rules I gave you a minute ago. So I guess that what I'm going to do is then I'm going to start changing timeframes. Okay, so instead of 15 minutes below and 2 hours above, I'm going to go for 15 minutes above. Okay, 15 minutes above, and below, I'm going to be looking at the 4-hour time frame. Okay, so I got the 15 minutes above, and I have the 4-hour time frame. Okay, so what do we have? Well, we have the moving average located at 62.82. So now, what the 4-hour time frame suggests is that when this market reaches the average, we will want to short. Okay, and expect on-field orders kick in because of the average pushing it down. And that would make sense only if we had red UFOs on the 15-minute time frame at that price. Okay, unfortunately, 62.81 happens to be more or less here. Okay, and we don't have a UFO. The UFO is much higher. Okay, so this time frame with the Nasdaq is not giving us a shorting opportunity that meet the rules that we described before. So what do? Well, you don't force a trade. You switch to a different market. So I'm going back to the S&P ESH19, and I'm going to do the same thing. So what do we have here? Our moving average is located at 2487. So 2487 is here. It's a very similar setup to what we have in the Nasdaq, which is not a surprising thing. Both are indexes. Okay, so we don't have a trade because we would need those UFOs to be a little lower or the average to be a little higher. Okay, so we don't have a trade in those time frames either. Okay, so what would you do? You would either change market or change time frame until you find a trade. Now, one comment as well I would like to add is that as you can see, I'm giving a lot of weight, a lot of relevance in this simple methodology to what the average is. Okay, I'm giving the average certain relevance because it's one of the key rules that will make you mechanical, that would force you to trade in the direction of the trend, and on top of that gives you a little bit of extra outs. So I'm giving it some relevance. Okay, but what you need to know about the average compared to the UFOs is that the UFOs never change. If you have a UFO located at 2493, that UFO will stay there all the time until it's traded. It doesn't matter if it takes 1 hour or it takes 1 week or it takes 1 month or it takes 1 year. That number will not change. Where the averages do change every candle. And in this case, we're looking at a 4-hour time frame below. So this trade right now doesn't work. But if you were to look at this trade when the candle closes, which is going to be 9 a.m. Chicago time, which is 10 a.m. New York time, if I am not mistaken, this is 7 minutes from now. So in 7 minutes from now, that candle will close, and therefore a new calculation for the average will take place. And you could find the average to be a little higher. And if the average is a little higher, and now the average is trading at, I don't know, let's call it 24.92 or something like that, well, now maybe we have a trade. Is that making sense? Because now the UFO is very, very close to the average, so we may have a trade. Okay, so the fact that we are discarding this trade now doesn't mean you forget about it. It simply means that based on the time frame you use below, every 4 hours in this case, you would go take a look and reassess the trade and validate if the trade is valid or not. And if it's valid, you could certainly plan for it. Okay, could you please, guys, confirm with a quick yes, a quick okay on the chat box, so I know that you guys followed me and it's all good. Okay, thank you guys. Thanks a lot. Perfect. Good. So now we got like 5 minutes or so before we conclude the session today. So what I would like to do, because we'll get to see that average after in 5 minutes or so. So we'll come back to this in a minute, but also to start preparing ourselves for future sessions too. So what I would like to do is I would like to switch to my other tab, which is the one that is named, as you can see below. It's named as UFOs Fibolab. So what I'm going to do in this one is I would like to plan trades based on Fibs. Okay. And again, I'm going to plan one trade, and I will explain the rationale behind it, and then you can spend the following part of the week practicing it yourself, and as you develop questions, you can send us email for support, or we can talk about it in person next time we get together, okay, in these online sessions, okay. But take a look at the rationale, okay. Here, if you were to trade with Fibs, again, one very, very simple approach would be to look at one time frame only, okay, because here's the beauty of the Fibs, okay. For example, if I calculate, if I take this very obvious high, and from here I draw Fibs all the way to the bottom, okay, those Fib calculations, 88, 78, 61%, all those Fib calculations, which I have done in the 5-minute time frame, if I change this to the 60-minute time frame, for example, well, guess what? I still see the same high and the same low, isn't it? So, one way to keep this very simple, I mean, you could certainly look at multiple time frames, but one way to keep this very simple, which I would like it to be my approach in this beginning part. So one way to keep it very, very simple would be to you look at one time frame only. Okay. Now, whatever you look at it in that time frame needs to be very, very, very relevant. Okay. It has to be very relevant. Okay. So, for example, those tiny bounces here, this very tiny little movement, this tiny movement, okay, you want to ignore that. This kind of noise. You will want to go, you will almost like kind of like do something like that, okay, where the candles become so thin, they almost disappear. So now you can see the whole movement, okay, the most significant movements, okay. And the idea when you're looking for those most significant movements is that you look for one significant movement to the downside and one significant movement to the upside, okay. So to the downside, this to me would be the most significant one from the top to the bottom, okay, and I just drawn my Fibs, and then I would do the same from the bottom towards the current price, okay, from the bottom. Oh, sorry, let me do that again because I didn't click in the right place, and then I would start with another one starting here from the bottom all the way to the current price. That's the idea, okay. And now I got all those beautiful lines there, which is actually quite confusing, okay. But now we're going to do the opposite of what we did before. Earlier, with the moving averages, we were looking at the average. Then we compare that with the UFOs, and then the average will tell you which UFO to use. But in this case, it's kind of the opposite. We have all the Fibs, and now I activate my UFOs. And the moment I activate my UFOs, now the UFOs will tell me which Fibonacci retracement line to use. And in this case, we'll notice that the only one that seems to be valid will be the one below, okay. And let me explain why. Let me write it here. This is the valid one, okay. So, but let me explain why this is the valid one. Okay. Well, if you look at this UFO, there is no Fibonacci calculation that lines up with it. There is one that is very near, but it's actually on the white space. Same happened with that one. There is no Fibonacci calculation lining up with it. If you look at this one, same thing, in the middle of nowhere. So could they work? Of course they could work. They are UFOs, okay? And you know the stats. So they could certainly work. But in order to make yourself more picky, it's always helpful to have multiple UFOs stacked on top of each other. And in this case, this one here, okay, this one here has one fib inside and one that is very near. So that one is not too significant because it's outside, just like this one is outside, okay? But there is a difference. This one is above, and it's a red UFO. In other words, if the UFO works, price will never reach that line. Where that one, it's above the green UFO, which means that for price to reach the UFO, price would have to trade through the 78.6% line. So what's going to happen is that if price trades through the 78.6 line and bounces because of the UFO, the Fibonacci traders or the computers that trade based on Fibonacci, they will assume that 78.6 is working fine, and that's why price is bouncing, where we know price is bouncing because of the UFO, but many computers around the world would be tricked by that, and they would start buying because that line was there or that line was there. Is that making sense? In other words, the fibs in this case act a little bit the same way I explained earlier with a moving average. It's a tool that potentially may add on-field orders after you have entered the trade yourself. Okay, and therefore it could be helpful. Is it going to be magic? No, but at the same time, now if you ask me the question without the fibs, okay, let me delete the fibs. If you ask me the question, okay, so Jose, out of 4 UFOs that we have on the screen right now, which one should I take? Well, we could come up with methodologies on how to decide that, okay, which could be quite diverse. But at the same time, what is very, very clear is that if you were to use the fibs the way I just explained, all of us would now agree and conclude that this is the most relevant UFO, okay? We call it the valid one. Why? Because you have 2 confluences with fib calculations that potentially imply new on-field orders to enter the market after you have entered the market. Is everybody with me on that? Can you guys please give me a little yes, okay on the chat box, so I know that you are following the rationale and everybody's with me. And in the meantime, we're basically hitting the ending time for the session. So I'm gonna move back to the next candle here, to the next workspace. And yes, I did the math right. So 9 a.m. Already concluded in Chicago. So a new candle started forming, and notice how the average is slightly in a different location, but actually it went a little lower than what it was before. It was located at 2486.46. Okay, as hopefully you can see there, where it says AVG exp 2486.46, where if you look at the current candle, it's located at 2484.46, which is a little lower, like 2 points lower. So definitely those red UFOs will not be valid for us to take a trade. So you will now need to be patient, and during the following 15 minutes or 1 hour or so, a new red UFO may form, and that will be the one for you to execute based on the methodology that we discussed at the beginning of the day. Okay. We have a question here from Fernando. Could you also add the percent to your plan? Would you mind to clarify for me, please, what do you mean by percent? Are you talking about percent risk, percent money you want to risk from your account, how much percent away you want the stop to be? So would you mind to confirm for me exactly what you mean by that, so that way I can give you a proper answer? Okay. So I'm just going to be waiting a few more seconds. Yeah, and again, while we're doing that, while I'm waiting for those few seconds, I'm gonna get the calendar back here on the screen. Oh, the percent of efficiency of UFOs. Yes, absolutely. Okay, and this has to do with the calibration effect as well, isn't it? So you would have done your calibration, you would know the efficiency. If the market that you trade or the time frame that you use provides the efficiency you want, then you are happy to use the UFOs. And now on top of that, today, I suggested, okay, just to open your mind and little by little for you guys to come up with your plans, okay? I suggested a combination with moving averages or also fibs, okay, for you to explore, experience, and put together the rules, okay? But everything starts, and 100% agree with that, Fernando, everything starts with the statistical performance of the UFOs. Okay, so for example, if you were to look at a market which is not liquid, very thinly traded, institutions are not trading them. Therefore, the UFOs have very few on-field orders behind. And on top of that, because there are few on-field orders, then those trades don't work too well, and therefore your statistics are low. So what would you do? Well, you would simply don't trade that market. Is that making sense? It doesn't matter you have a moving average. It doesn't matter you have fibs. It doesn't matter whatever you do. But if you had good percentage of efficiency and on top of that, other rules line up, well, now you have a mechanical approach to trading where certain rules add probability, the UFOs are the key, and then altogether, there's only one thing left. It's for you to be professional, for you to be mechanical, for you to be for you to manage your mindset and your emotions and act professionally with consistency, and therefore you will get consistent results from the market. That's it. Is that making sense? Good. So on the screen, guys, this is the way I'm going to say goodbye to you. On the screen, you can see the following dates: January 4. So that's going to be Friday. Okay. Take a look at this. A few hours from now, this will be updated with the time. We'll be updating little by little. I mean, we just started the year, so we are still getting organized, everybody. But we'll be updating this table with the times and so on, and we'll be acting on it. Okay, so please participate of those sessions. Please like us on Facebook or LinkedIn or both. Okay, and it's not only a request to help our UFO companies. It's not only about that, even though, of course, we appreciate that too, but it's more about many times the way we communicate with our users is via social media. We are in the year 2019, so emails are getting a little outdated, isn't it? So we will certainly shoot emails too, but social media is quite impactful as well. So please like those pages as well. So that way, when we post something, you can also be informed on time. And also, you can also get into our YouTube channel too. And you can also subscribe by clicking on the little bell, so that way when we're doing anything, when we post anything, you also have access to that recording or anything that we do on the YouTube as well. Okay, so that way anything that we do, you are connected with us and we can collaborate more efficiently. Okay, and the last request before we go would be that as you start using the tools and you start practicing and you have questions, send email to us. The email address, as you probably know, but just in case, I'm going to type it on the screen. Email address is rich@tradewithufos.com. Okay, and I think it's a good practice. It's a good habit to develop, that if you have a trade that you want to review, if you have a question, if you have a trade that you are planning to execute, you haven't taken yet, you want us to look at it all together, just send all those requests via email. So that way, when we start doing our sessions, we can start the session by looking at what your questions were. It's always limitative to give you answers in a written form in an email. It's always very difficult to give a proper, complete answer in a written form. But in those sessions, we can really spend time. And today we did a 1-hour session, but if it's needed to do an hour and a half, we'll do it an hour and a half. It's not a problem. And give answers to all of you. And you obviously using microphone and sharing the screen is always much more rich when it comes to giving you a proper, complete answer. Okay, so thanks for your participation, everybody. happy New Year. Delighted to have been running this first session of the year with you guys. We will see you soon. So see you on Friday, guys. Okay, and please send us those emails. Really looking forward to seeing your progress and your success. You guys take care. Bye bye.